Good afternoon, traders and investors. Will back here with another one, coming to with a Monday market recap. Hope all of you had a very good day of trading and a very beautiful weekend as well. And in today's markets, guys, well, there's never a dull day in the markets, is there? And today was kind of no different. What started off as a fairly normal day of price action, not much movement at all, quickly turned a little bit volatile in the late afternoon. Number one, we had Jerome Powell coming out and talking at an economic conference, and initially the news was received bearish because of Jerome Powell's opening statements about interest rates. And then he started talking about the soft landing scenario, and the markets simply recovered. So that was piece of news number one. We're going to cover it in a few minutes on the channel. And then piece of news number two that everybody was talking about today has to obviously be the news about the port strike. The port strike affecting possibly 14 different ports across the East Coast and the Gulf Coast as well, and could possibly do a significant amount of damage to the economy in the event the strike were to last a very, very long time. That's not in the cards so much, so we're going to go through this exact article right here and determine whether or not this is going to have a lasting impact or whether or not it may just be a news event for today and maybe just for the remainder of the week without so much lasting impacts to be had. So those are the two news articles we're going to be covering today. Thereafter, we're going to go through our major technical analysis rundown of our major market indexes, see how those are shaping up, take a look at our big tech names, see how those are shaping up as well. And lastly, cap it all off with a review into my portfolio to recap some of the trades that I closed last week and which trades that I have remained open for this current week. So without further ado, guys, a lot to cover in today's video. Let's jump right into the action. So SPY up a healthy 0.42% due to that end of day rally, and the QQQ's up about 0.27%. All in all, guys, at the end of the day, very decent broad market rotation. As you can see here from the heat map, most of the market having a very good day today. The only negative point remains once again semiconductors. Semiconductors really not having the best time in the last 2 months, have they? But what has been outperforming today definitely has to be big tech. Everybody except for Amazon getting a lot of love. Consumer defensives not having a bad day either. Financials, pretty decent day. Healthcare too, and the bottom half of the market as well. Much more green than there was red to be had. Now, in terms of your one-day performance, you can see that even better. Most of your market sectors were in the green. The only ones to the downside were consumer cyclical and some basic materials. Consumer cyclical really getting dragged down by the port strike news because that is the industry that will most likely get affected the hardest in the event the strike lasts more than possibly just a few days. So that being said, before we get into more technical analysis here, guys, let us dive into the news articles real quick. And we're going to cover what Jerome Powell said to make the markets go down a tremendous amount in the afternoon, down almost 7.7%, and then recovering bottom to top over 1% on the SPY, and a very volatile move in the QQQs as well. So let's have a look here. Powell indicates further smaller rate cuts, insists the Fed is not on any preset course. Now, a little introduction, guys. He started off, and one of the first interview questions that he had at the Economic Forum was to be in terms of the pace of rate cuts, right? And this is where the markets and Jerome Powell are thinking or assuming two different things, right? Jerome Powell, as we've seen over the last 2 weeks, him and the Federal Reserve are very steadfast on only doing another 0.5% in interest rate cuts by the end of the year. But you guys know the market always wants more, and they assume that he will be giving more. So exactly what he said today he hinted at the fact that there would only be, once again, 0.5% interest rate cuts by the end of December. Now, that is exactly what the market had been told prior. About 2 weeks ago, we got the summary of economic projections, aka the dot plot, right? We knew that that is what the Federal Reserve said, so it should be no surprise that Jerome Powell said that again today. The problem is that the market was expecting one more rate cut. So this is just another example of where the market wants more than what the Fed is saying. And then when the market doesn't get it by the Fed saying exactly what they're supposed to say, the market kind of goes into a little bit of a tantrum phase because it's not getting what it wants, right? So let's move into the article real quick. So here's what he had to say. Looking forward, if the economy evolves broadly as expected, policy will move over time towards a more neutral stance. But we are not on any preset course. The risks are two-sided, talking about inflation and obviously the jobs mandate that they have to protect. And we will continue to make our decisions meeting by meeting, aka they will remain data dependent. No surprise there. They've been saying that, guys, for a year and a half at this point, right? So This is not a committee that feels it's in a hurry to cut rates quickly. If the economy performs as expected, that would mean 2 more rate cuts this year, a total of 50 basis points more. So basically saying that in November, possibly a 0.25, and then in the December meeting, another 0.25. But the problem is the market was pricing in 0.25 for November and a 0.5 cut in the month of December. So now that Jerome Powell is saying, no, we're still doing 50, the market throwing a tiny little bit of a tantrum, and then everything kind of got erased when Jerome Powell went into the second half of the interview, which had to do with the soft landing scenario. So let's move further into the article. The likelihood of another 50 basis point in cuts would be consistent with estimates provided in the FOMC's dot plot, indicating individual officials' assessments of where rates are headed. That's what I was just saying, right? Now, futures market pricing is indicating that the Fed is more likely to move cautiously at its November 6-7 meeting and approve a quarter-point reduction. However, here's the however, traders see the December move as a more aggressive half-point cut. So there is the reason for the little bit of interest rate tantrum sell-off right there. And then we recovered it very quickly when Jerome Powell started talking about the fact that the soft landing scenario was definitely still on the table, talking about the economy was still resilient, talking about the fact that the jobs market was still relatively stable too, and all of that really undid most of the damage. And then the markets really ran away with it coming into power hour after he concluded that meeting. So that's pretty much everything, guys. Nothing new from Jerome Powell to speak of, just some classic market price action in terms of the early afternoon. And then news article number 2, guys, has to definitely do with the port strike, right? As of today, the market's really not reacting in a negative fashion to that. This news has been out pretty much since the early morning. And during the early morning, we didn't really have much sell-off in the SPY, nor did we have any massive sell-off in the QQQ. So let's go into the article, guys. Are people potentially overreacting to the implications of this port strike? Well, let's have a quick look at the article, and I'll give you my thoughts on the matter. So East Coast port strike, truckers, rails scramble to move billions in cargo before the union midnight shutdown. So let's move into the article, shall we? So on average, it takes 1 week to clear out 1 day of a port closure. As much as 43 to 49% of total containerized goods entering the US are processed through ports on the East and Gulf Coast. Now, as our data shows, a strike of even a week will block the flow of hundreds of thousands of containers into the US. And here are your top US importing companies exposed to the impending port strike. This is the number of 20-foot containers that they import. As you can see, this data was for a 1-year period from September 23 through September 24. As you can see here, guys, all of these companies are mostly consumer, either staples or consumer defensive companies. Walmart stands to have the most exposure to this, but you can see a lot of different names in the mix right here. IKEA, Samsung, Home Depot, even tire companies, right? And especially car manufacturers too, such as Hyundai, Dollar General, General Motors, Amazon. Not that much, surprisingly, for Amazon as well. And the list simply goes on. Every importer, exporter, and even domestic shippers should be watching developments very closely this week because of the impacts of a port strike on the US East and Gulf Coast ports could potentially impact all modes if there's a strike and if it lasts longer than a few days. I do personally not expect this one to last more than a few days, guys. There's just too much riding behind this. I think the union will come to agreements with their overall employer because there's just too much riding on this at this current point, guys. There's going to be a lot of external pressures as well from the government to resolve this in a timely manner, right? Because we know that the implications of a long-form port shutdown, you saw what it did during the pandemic, right? That is a precursor to heightened inflation. Now, obviously, you need a very long form shutdown to cause any meaningful increases of inflation, but the risk is always there. So in recent days, top Biden administration officials spoke separately with the union and the representatives, urging the parties to come to a fair agreement quickly. The Biden administration has stated on several recent occasions that it will not use federal powers to force dock workers to remain on the job. We've never invoked Taft-Hartley to break a strike and are not considering doing so now. Now, the Taft-Hartley Treaty is something that the government can do. They can actually break up a strike. They can force workers back to work in the event that they deem there to be two things, either health concerns for the overall population or broader economic concerns for the overall population. And this one definitely fills criteria number 2, but they don't want to do it, guys. The Biden administration said they do not want to have to resort to those measures. So a ports strike could threaten the recent gains made in bringing down inflation and the prices paid by consumers across a wide range of goods. Now, obviously, guys, you would need a very long form strike, a very long and drawn out port shutdown, right? Talking about probably 3 weeks, a month, right? 3, 4, 5, 6, 7 weeks to have any meaningful uptick in inflation. And as a whole, we're starting at inflation at a very, very low level right now. So could we maybe see a little bit of a bump here in the month of September? Possibly, but I don't think it's going to be any more than that. Now, moving on further, based on prior port strikes, ocean carriers normally profit from soaring freight rates based on demand for other ports. Ocean spot rates for containers could increase by 20 to 50%. UBS forecasts that 20% of Maersk's total volume would touch a U.S. port that would be impacted by the strike. Maersk is the largest shipping company in the world, guys, and as you can see, them off of the news today, guys, their stock was up pretty much 4% on the day. Very nice rally from them, but of course, that is because of the negative headlines that we have right now. So let's move on further. A majority of both registered voters, 58%, and the general population, 54%, would support the Biden administration intervening and ordering the union to work and negotiate through the use of the Taft-Hartley implications, right? They don't want to do it, however, but if push comes to shove, they may be forced to do it, guys. Especially in an election year, they will not be taking a chance with a resurgence in inflation. But I don't think they're going to have to enforce this. I think they will put enough external pressures for the union and employers, obviously, to come to an agreement. So that's pretty much the gist of things. Moving on a little bit further, depending on the length of the strike, the toll on the U.S. economy could reach into the tens of billions of dollars. A 1-week strike could cost the U.S. economy $3.78 billion and cause supply chain slowdowns through mid-November. Now, this may seem like a lot, guys, but just a quick reminder, here is the actual GDP of the US economy. This is from 2022, but now it's obviously substantially higher at about $27 billion per year, right? So it's going to take a lot to derail the US economy just from a few port strikes, but it is an important factor to say the least. There is no easy plan B. While shippers have already begun diverting some cargo to the West Coast, capacity for such alternative options are limited. So there you pretty much have it, guys. A quick summary of the implications right here. And if you're thinking what could possibly be some of these sectors that get hit the hardest, well, as I was saying, guys, it's all your consumer discretionary stocks and all of your consumer staple stocks. Anything that imports goods and sells them to the consumer. What will most likely not be affected, however, are these following ones. The union has pledged to continue handling military cargo even during a strike and said passenger ships won't be affected. Oil tankers and ships carrying liquefied natural gas usually go to other facilities that are not affected by the strike, as do bulk ships carrying things like grain. So these industries will not be affected. Oil and gas, no. Military equipment, no. And commodities such as bulk grain, lumber, things like that will also most likely not be affected. So how are we going to play this, guys? Well, in the event the strike gets underway and things really start hitting the fan a little bit, I would be very cautious with consumer discretionary stocks and even consumer staple stocks, which have been on an absolute tear recently. You can see this right here. This is XLP. In the past 6, 7, 8, 9 weeks of performance, they've been doing fairly good. This could be a good opportunity for a pullback in this sector right here. And consumer discretionary stocks, we all know they've just not been performing too well as a whole, so they may see continued declines. But which sectors could possibly make up for these ones, guys? Think of some sectors, right, that may not be affected by this, some sectors that have been a little bit left behind in the most recent few weeks of trading, right? Well, I can name you just a few, right? Semiconductors. Semiconductors will most likely not be that affected by the port strikes. What else? Think of all of your technology companies that have been left behind, right? A lot of big tech names that are no longer at their all-time highs. Some companies like Google, companies like Microsoft, things like that. So there is a lot of weight in the market that is just waiting to be rotated into. So if you have some institutions and retailers retail traders rotating out of consumer-facing stocks, where could they maybe be putting their money into? Well, some of the sectors that have not been shown as much love as other sectors in the market. And in my humble opinion, this could be a great opportunity for a little bit of a technology run, or maybe even a little bit of a comeback for your semiconductor names. So that's pretty much everything for our news articles for today. Let us jump into our technical analysis portion of the video, shall we? So moving into the SPY right now, nothing has changed on the SPY at all, guys. It's still a very nice daily uptrend right now. And because of the fact that we had a daily hourly downtrend right there, you had some daily consolidation. And now that the hourly bulls have it back looking for the hourly trend change, we can assume that the daily higher lows are set right away. So daily uptrend is very nice. Daily higher low is set with the low of today. Any move higher, of course, beyond the all-time highs, just continues this daily uptrend in a very beautiful fashion. However, if over the course of the week, guys, we lose these levels, that would be synonymous with a loss of the daily uptrend into a little bit of daily downtrend consolidation. And we have the economic reports to possibly warrant that. Tomorrow, obviously, well, possibly the port strike is number one. We also get ISM manufacturing data. This is economic output. If this comes in a lot weaker than expected, expect the markets to have a little bit of a sell-off. This is what cascaded the early sell-off in the month of August, I'll remind you. So pay special attention to this report tomorrow. Then on Wednesday and Friday, we have the jobs reports. Private employment on Wednesday and your non-farm payrolls employment on the Friday session. So economic output data, the port strike, and the jobs reports could be some factors that could erode the bulls' capacity to push new all-time highs and may send us into daily downtrends. And if that happens, what are we looking for here, guys? We'll just be looking for a casual weekly higher low. The bulls in full control of the weekly time frame right now. If we do pull back, I'd be targeting this big green box of support, and that is 564 down to about 560, your previous all-time highs. So the bulls have a lot of space to work with right now, and I would not say that there are any major red flags in the markets currently. Moving into the QQQs. QQQs also looking not too bad today. Nice daily uptrend currently still in motion, looking for the daily higher lows, and pretty confident in saying that they may just be set right now. Hourly downtrend was in motion, engulfing move. If we can continue this engulfing move into an hourly uptrend tomorrow, that will mean your daily higher lows are set. And then we are just looking for the continuation of the daily trend expansion. We are reacting very nicely from this current area of support, which is going to be the 483 down to about 478 level. So looking quite good there. However, if for some which reason the markets unravel, guys, we would still just be looking for a daily higher low. At this point, anything above 471, just looking for the daily higher low for possible further trend continuation. So if we do not have it right now, the bulls still do have a lot of space to be working with. I wouldn't be too concerned. No major red flags right now. And in the event we pull back into a daily downtrend, well, just understand, guys, still have a lot of space on the weekly, anything above 447, looking for a weekly higher low for possible further trend continuation. So no red flags for the QQQ bulls just yet, just kind of lagging a little bit behind the overall SPY. SPY will be on the all-time highs, and QQQ still not yet touching the previous all-time highs set in early July. Now, moving into financials. Financials having a fairly good day as well, up about 0.38%. And this chart looks very, very good right now, especially when you look at it on the weekly. Very nice weekly uptrend, culminating in a little bit of a weekly bull flag at the top, right? Nice tightening range of accumulation. You can say that this is also a somewhat of a form of a tightening wedge or a bull flag. All signs do point to decent bullish continuation to the upside. Nice daily bull move off of here. Higher lows are set, and now we're looking for the trend expansion beyond our prior all-time highs. The red flags come in the event we lose last Wednesday's lows at about 44.66. If that's the case, daily downtrend is set, and we are just going to look to maybe tighten up this range of accumulation a bit more. We have a lot of support below us, guys. The 12 EMA down here at about 44, and then obviously this little range of support down here at about your 44.10 down to about 43.50. So a lot of support levels below us on the bulls. I would not be too concerned right now. The bulls still in very decent control for financials. Now, and financials earnings starting in about 2 weeks worth of time. Moving into healthcare right now, healthcare getting a little bit of love today, 0.65% to the upside, and they kind of needed it, right? We had this big daily downtrend underway, on the healthcare sector, and now we're getting a little bit of a bounce. So take a look at the hourly time frame. The bulls are trying. They are trying to reset this into an hourly uptrend. If they continue into tomorrow, guys, we are going to watch the size of the bounce. Now that we're in a daily downtrend, the bulls need to get the uptrend back. So there's two ways of doing this, right? Number one is just the pure V-shape engulfing move, but the number two more likely scenario is we're going to try and find an over 618 bounce on the fib. That would be a bounce at least to about 155.41. If the bulls can put in a decent sized bounce, it creates enough space that on any consolidation, they have enough space to set up for a daily higher low and go for the two-step daily uptrend recovery. That is the more likely scenario in my opinion. Moving on to the weekly right now, the weekly is currently in a little bit of a weekly downtrend, which means that we've been in slight monthly consolidation. Beautiful monthly uptrend. A little bit of monthly consolidation never hurt anyone. So even though it appears we are in a little bit of a weekly downtrend right now, I wouldn't necessarily say that there's any major red flags. As a matter of fact, the bulls are doing a great job of protecting this 12 EMA on the weekly time frame. So healthcare, not looking too bad, but once again, look for the size of the bounce. And there's a few nice healthcare plays that are on deck right now. Merck is the first one that I can think of, establishing some very nice support levels down here at around the 113, 110 for a little bit of expansion, right? Looking for the monthly expansion eventually. Going to be looking maybe for AbbVie. If AbbVie can ever come back and pick us up down here in the 190, 186, I'd be a big fan of taking this one. So far, it's just hovering around the all-time highs. UNH as well above the all-time highs right now, looking quite good. Not offering a trade opportunity just yet, but if the healthcare sector has another leg down, look for the 560 to 550. That is where I'd be tempted to make a trade just for some monthly breakout, retest, and run action. Those are just a few of the names that I'm looking at too, and even some of your GLP-1 drug makers such as NVO and Eli Lilly have been taking a little bit of a hit recently. NVO trying to find a relative bottom here in the low $120, $118 range. That one, and even Eli Lilly as well. So these do represent some good medium-term opportunities. We know there's some short-term headwinds, but in terms of the guidance for the next few quarters and the next few years, it is very good. So if anything, I do believe that those companies represent some good buying opportunities right now. Just my opinion, not financial advice, of course. Now, moving into semiconductors. So semiconductors down about 0.92%. Not the best day for them, of course, but as a whole, guys, no major red flags in the sector, right? As we know, daily uptrend was started last week, and now we're looking for the daily higher low. We got rejected in this area of resistance that we were predicting. 257 down to about 248, looking for the daily higher low. Anything above 230, looking for the daily higher low for a possible second attempt at breaking through this resistance zone. On the weekly is not looking too bad here, guys, but suffice to say, if we get any further consolidation and tightening up of a range, right, we're just maybe looking to tighten up even the weekly range. We're trapped right now. Trapped between overhead resistance and trapped with below support as well. I do believe that any dip into this area right here could be a very nice opportunity to pick up some of your favorite semiconductor names. Just a few of the ones that I'm looking at currently right now is going to be ASML. I like this company. TSMC, of course, is also on its own little pullback. I like it in the 170, 160 area too. AMD, of course, we're going to take a look at that one later. That one also representing a good buying opportunity for any dips whatsoever. So there's a lot of decent discounts in semiconductors right now for a little bit of a swing trade. So we'll be keeping an eye on those on the channel, guys, all throughout the week, of course. Now, moving on next, we have to take a look at the Russell. Russell up about 0.25%. Not the best day for the Russell, but not a bad day to say the least, right? What is the Russell trying to do? On the daily, the price action looks very ugly. Key points right here is that we're trying for the daily uptrend conversion. That will be a breakout of 224.60. However, break the low of last Wednesday without making a new high, and you would end up with a daily downtrend, which would mean that we may just be going for the tightening up of this range too, right? Very tough for your growth names to run unless we get the green light that the economy is fine, the jobs market is fine. As of right now, there's still a lot of recession headlines, recession fears in the markets, which is why these rallies don't get much follow through. We're not able to break out of the highs of 2020 and 2021 when it was really the growth narrative, the risk on narrative. So far, we do not have that risk on narrative in the markets, guys, which is why we're seeing a little bit of hesitation. So my stance remains the same. If we get a pullback back down here to 211, 210 with some overall market weakness, that is where I'd be considering making a little bit of a play on the Russell right here. But at here right now, I just can't do it, guys. I'm not in the business of buying into a very large area of resistance. I'd rather wait for the market to come to me and possibly buy the dip down here. Now, moving into the Dow Jones. So the Dow Jones performing decently today, roughly flat, but the pattern is very good, guys. Beautiful daily uptrend on the Dow Jones right now. So daily higher lows are set most recently with 41,863, and we're pretty much just looking for some continuation of the uptrend at this current time. In the event we fail the all-time highs and break down below Wednesday's low, that would be a failure and loss of the daily uptrend. Could set us up for a daily downtrend if the markets cool off a little bit. And all we'd be looking for at that point, guys, is a weekly higher low for further trend continuation. So I will be looking for some Dow Jones. I like playing some Dow Jones for some future trades sometimes. I'd be looking for a pullback into the mid 41,000 level. This whole area of support, the 12 EMA is right there. All of our prior areas of all-time highs are there as well. If we get a pullback, a little higher low into this area right here, could be a nice opportunity for a little bit of a swing trade to go higher on that index. That's everything for our index recap, guys. Now let's move into a little bit of other trades. We're going to cover Bitcoin ever so briefly just because it made a big move today, but nothing really has changed, right? So daily uptrend remains with the bulls, but now they gave it all back, right? Keep a close eye on 62,600. If we lose that, unfortunately, you lose your daily uptrend. You open the door for the daily downtrend back to the bears, and that would mean that we're maybe in for a little bit of weekly consolidation. But that's okay, guys. We have a lot of space, right? Nice engulfing move on the weekly, looking for the weekly higher low for possible further trend continuation. So I'm looking for Bitcoin. If we pull back here, guys, 61,005, 61,000. I will probably be looking to make a little bit of swing trades right here on Bitcoin because Bitcoin's done something recently that they have not done for a very long time. Look at these weekly moves higher, right? This one failed and lower. This one not quite engulfing, failed and lower, right? This one, same thing, not quite good enough and lower. This is the first over 100% engulfing move on the weekly that we've seen pretty much since the month of March. So I want to give it a chance. If we backtest this location, I'll be looking for some longs for some expansion of that trend right there. So that's everything for Bitcoin. Now moving into our big tech names, shall we? So Apple up a whopping 2.29% and really blasting past this resistance zone in a big way. This is the day that Apple needed to really make its move back to the all-time highs. That being said, daily uptrend right now is nice. They pretty much almost have it equal highs right here. Any green into tomorrow, new daily uptrend on Apple is confirmed. And at that point, guys, we're going to be targeting the resistance areas of about 237, right? Any pullback at this point, going to be looking for a daily higher low. Anything above 224, looking for the daily higher low for possible further trend continuation. Now, for all of those of you that love playing swing trades on Apple, there is a trade set up here at the current time. This is your previous area of support, these two yellow lines, 227 down about 224. This is the infamous breakout, retest, and possibly run. So in the event we retest this area right here, there could be a little bit of a swing trade from roughly the 227 back up to your all-time highs, and the stops would obviously go below this guy right here because then that invalidates your entire trend, right? So Apple, not looking too bad. I'm very hesitant to play it up here though, just because of the valuation, right? Very tough for me to play it with some size, but there is a little bit of a swing trade right there. So got to call it as I see it, right? Moving in, weekly uptrend is nice right now. If we get a green week on Apple closing above these two locations right here, pretty much where we are right now. If this week closes above 233, brand new weekly uptrend is in the cards for Apple. And then we just be simply continuing on this beautiful monthly uptrend march. So everything looking pretty good for Apple. No red flags to speak of. Moving on to AMD. So AMD pulling back a little bit today, but that was kind of to be expected. Overall, the semiconductor index was very, very weak. No real gains to be seen, right? So even AMD could not get it done, but that's okay. It's kind of what we were looking for when I did the yesterday's top 5 options play video, right? This is going to open up some swing trades as well for AMD. So take a look at this. Nice daily uptrend, blasting past this area of resistance, the red box. Big area of congestion, right? Previous support as well, previous support as well, and resistance, big congestion, this whole area, resistance. So you guys know this area is a very highly contested location. That being said, we are now pulling back into it. So this is the breakout, retest, and possibly due for another leg higher on semiconductors, more specifically on AMD. So any pullback in this area, guys, could represent a decent buying opportunity for a little bit of a swing trade on AMD. As well, nice new weekly uptrend on the stock as well, which is why I say I have a bullish lean for this daily trend, guys, just because We have now recaptured the weekly trend as well. So AMD not looking too bad as well. One more day of red is going to open up some short put opportunities in the lower 150 area, and I will be shopping for it. Maybe even if we pull back here, 160, possibly an opportunity for maybe some call options or some call debit spreads with a little bit of time, right? 2-3 months worth of time, so we can capture a lot of those gains without sacrificing too much to theta decay. Moving into Amazon right now, Amazon down about 0.87% and down an additional 0.41 in the after hours. So Amazon suffering a little bit, possibly because of the news from the port today, but I couldn't really find any other meaningful news for the company specifically, right? So unfortunately, Amazon tried to break out of this whole region right there, the whole 190 area, broke above it for 4 days, and now we're kind of back down below it, right? But that is okay, guys. Why? Well, we are still in a daily uptrend right now. The bears have taken back a lot of this move though, right? So we put the fib on this, you can see the bears have taken back over 80% of the move, which leads us to believe that possibly the best case scenario for the bulls is maybe just a tightening range, or the worst case is get rejected at this 190 box above us right now, get rejected and lower. That would be a daily downtrend. The reason I say it's not too bad, guys, zoom out, look at the weekly. Beautiful weekly uptrend. We are looking for a weekly higher low for possible further weekly trend continuation. So I'm a buyer of Amazon. If we continue this slide into the low 180s, I will be looking to buy some shares here at 180, or at least be playing some short put options. I think it's a great opportunity, especially when we are considering the higher timeframes here, which the bulls do control. Now, moving on to Google. Google exploding here in the late part of the afternoon, wasn't doing too much at all during the day, but then in the last hour, more specifically in the last 15 minutes, really came alive. So Google did a beautiful move, right? We had the daily downtrend right here, the bulls fully engulfed. We hesitated sideways, which is the best case scenario. This was a bull flag, and I commented on that last week on the channel. And usually when they consolidate at the top end of the move and don't give back anything under, well, the expectation is for possibly a second leg of continuation, and it looks as though Google wants to go for it. Resistance above starts at about 170 and runs all the way through 180. This would be one of the areas that I'll be looking for the bulls to maybe have a little bit of trouble getting through in one clean shot. So may just get rejected there and pull back at that point in time. I like Google though, even at this location right here, guys. The valuation is tremendous for the company and could be a very decent add for a long-term portfolio. Swing trades, guys, I already have my swing trades, took a lot of the swing trades here, and we have a few that are currently running right now. So I'll just hold Google for now. In terms of the weekly, not looking too bad, guys. Almost getting back to that 100% engulfing weekly move. As I said, just keep an eye on your overhead resistance, but Google is looking very good for this second leg of expansion, so long as the SPY and QQQ do not fall off of a cliff because of any economic events that we have this week. I do believe Google should be able to maintain this pattern. Moving on to Meta. So Meta down, Meta up about 0.9% rather. Meta looking very good, guys. Pretty much doing the exact same thing I just showed you with Google, right? Beautiful move higher, and now consolidation at the top end of the move. The bulls are not giving back anything much at this current time, right? So the expectation at a first glance would be for a continuation trade pretty much to the $600 psychological level. However, if we come down and break last Tuesday's low without making new highs, that would be a new daily downtrend on Meta and would just be very, very beautiful weekly consolidation, right? Gorgeous weekly uptrend on Meta right now, looking for the weekly higher lows for possible further trend continuation. So in the event the markets have a little bit of a red week this week and Meta comes back down here around to the 545 level, even a bit lower, that could be a beautiful breakout, retest, and possible run trade. I will be looking for the retest around this location, guys. I'm going to be buying some Meta for that continuation leg into the 600s. The valuation of the company is beautiful. The company guidance is beautiful. There is no red flags whatsoever. This one remains a buy for me all throughout 2024. Now moving on to Microsoft. Microsoft up about 0.53%. Not the best day for Microsoft, but also not the worst. What is Microsoft trying to do right now? Well, we know that we broke out of this this whole box of used to be resistance, now support, because we broke through it, now coming down into it, right? So 433 down about 424 is the lower end of that support range. We know that Microsoft is in a daily downtrend right now. We're just looking for that to come to an end because we're looking for the end of weekly consolidation into this support level, right? So we're looking for the weekly higher low. Anything above 400 is going to be that weekly higher low for further trend continuation. So I love Microsoft. It almost came down where I wanted it. I might be getting a little bit too greedy on this one, but I like this one, guys, for some trend continuation. I do think the bulls have it in the bag to be able to reverse this into a new daily uptrend. Why? Because our bias is bullish. They have the weekly control here, guys, right? So that is why I think Microsoft could be a very, very good swing trade, even from these current levels here, guys. And the shorter term timeframes, look, you have your hourly engulfing move with the end of the day. If they conclude with an hourly uptrend, you know that your daily lows are set, and then it's up to the bulls to take out your previous high of the most recent daily downtrend. If they do that, then you know that most likely Microsoft is going for that weekly leg higher and potentially trying to attack the higher end of its all-time highs later into October and maybe into early November as well. Moving into Netflix right now, Netflix with a decent day, 0.27% to the upside, hasn't really been doing much. The analysis stays the same. Beautiful daily uptrend on Netflix, looking for the daily higher lows for further trend continuation, right? We are now beyond the all-time high area of support. These two yellow lines right here, 697, let's call it 700, right? All the way down to roughly 675 is the level. They've been riding the heck out of this 12 EMA for quite a long time at this point. I do not see any red flags with this chart. If anything, it does look very, very bullish for some possible continuation to the upside. Even on the weekly, guys, nice weekly uptrend on Netflix. No red flags at all. The red flags only start if we start losing 689 in a big way, set up the daily downtrend, lose 689, then you may have some extended weekly consolidation, but there's a lot of space. Anything pretty much above 663 would just be looking for a weekly higher low for further trend continuation. And we do have this whole area, guys, below us that's going to be acting as very solid support for the bulls. So no red flags on Netflix, just looking for a little bit of that trend continuation. Moving on to NVIDIA right now. NVIDIA up about 0.03%. Not the worst day for NVIDIA, but also not the best too, right? At a certain point, NVIDIA was down on the morning as soon as the market opened, right? Over 2.5%, almost 3%. And then it did a great job of recovering the hourly timeframes into the end of the day. So what we're looking for on NVIDIA, we know that they had a very nice daily uptrend in motion, looking for the daily higher lows. Anything above 113 was just looking for daily higher lows. And in the event they continue this hourly uptrend into tomorrow, guys, well, your daily higher lows are set, and we may just be looking for leg number 3 on this daily uptrend expansion, targeting up overhead resistance here of about 130, reacting beautifully from our 119 to about 115 box of support, this big green box right here. So no red flags for NVIDIA bulls right now, but on the longer term timeframes, they still do have their work cut out for them. As of now, it's still just a tightening range, right? If you want a weekly uptrend, we need to get a break and close above the infamous $130 level. In the event they cannot get it done and semiconductors continue being a little bit weak, and we give all of this back here, guys, we're just going to be looking for a tightening range. You'd like to see the bulls maintain above 102 at that point, right? Any move lower, guys, I'll be looking to sell some put options. 106, 105, you guys know where I want this stock. Moving into Tesla right now. So Tesla also not a bad day at all, 0.45%, and starting to challenge some of the last recent resistance levels that we do have, culminating in pretty much the 265. And this is a big one, guys. Not only has it been resistance here, but it's also been resistance here last December, last October, last September, right? The list just goes on, last July. So 265 is a very big level for Tesla. That being said, the bulls are in full control of this daily push right now. Beautiful daily uptrend on Tesla. So in the event this move tops out soon, let's say we cannot break that 265 resistance, well, we're going to be looking for a daily pullback, looking for a daily higher low. At this point, anything above 223, looking for the daily higher low for maybe a second attempt at breaking through that 265. Keep in mind, guys, we're getting delivery numbers from Tesla pretty much tomorrow at this point. And then we have a few more catalysts. We have the robotaxi event coming up in about 2 weeks' time. And we also have earnings coming up in about 2 weeks' time as well. So the price action for this one is going to be largely dependent on those delivery numbers. So keep a close eye on those. If they are not what the market expected, coming in under the expectation, let's say, or there's any bearish news, keep in mind Tesla has a lot of space to pull back, reset, and maybe prepare for some bullish robotaxi news or bullish earnings. We'll take this one day at a time just because there's so many news events coming out in the next 2 weeks. Moving into Palantir right now. Palantir up about 1%. Palantir having a very decent day as well. consolidation at the top end of the move, guys. The bulls are looking excessively healthy. For all intents and purposes, this is a bull flag, right? Yes, we are slightly struggling with the overhead resistance 38.39, which was the last area right here in 2020 and 2021. But for all intents and purposes, guys, the bulls have not given back too much of the move. Looking good, looking like a nice bull flag, maybe due for another attempt at trying to crack 38.39, maybe even 40. Very tough for me to play though because of the valuation. I would be more keen on waiting for a Palantir pullback, which may be also brought through with a overall market pullback, because I'd be hard pressed to say that this company is going to say any bad news coming out of itself in the near term future, right? All news coming out of Palantir should be relatively bullish in the near term future. The only time that this one may pull back is with an overall SPY and QQQ pullback. Just keep an eye on these levels, 35.67, lose that without making new highs. Daily downtrend is underway, and then we'll just be looking for a weekly higher low, guys. Super healthy chart at this point, right? Any pullback, looking for a weekly higher low for possible another attempt at that 38.39. This is the move that I'm waiting for, guys. 35, if we pull back $35, $34, I'll be looking to write some short puts all the way down here. 32, 31 bucks is where I would like to pick up a little bit more Palantir shares for that next leg higher in the event we get an overall market sell-off at that point, right? But Palantir looking extremely, extremely solid as of right now. So that's pretty much everything I had for you guys in terms of the market rundown. Now let's go through my portfolio very briefly. So before we go through this couple of the stocks that we had open, guys, let me go through a lot of the trades that we closed, right? So I'll go through this list and you'll see that although I do still have a number of different positions, I have closed a lot, as I told you guys I would be doing, right? Over the past couple of months, I showed a lot of different small account strategies. Obviously, we did a lot of call debit spreads, we did some put credit spreads, and a lot of different things like that. I tried to show you guys as many trade setups as possible to give you guys a good sense of the styles of trades that I like to take and different industries as well, and how I like to price out my call debit spreads and things like that. But now those times are kind of coming to an end. We're going to reconsolidate the portfolio into what I was doing when I started the channel all through up until about 2 months ago, when I promised you guys I'd show you guys a lot more trades, a lot more small account strategies, right? So now we're going to be consolidating a bit into fewer plays and bigger size plays, right? So more quality in as opposed to more quantity. So the ones that are closed right now, a few of the call debit spreads, I can't really show you guys the actual trades because Interactive Brokers puts them on 2 different lines like this in the transaction history. So it's very, very hard to follow. But if you've seen a lot of my videos, you can even go back just a few weeks ago and you'll see these same positions. Just understand that I closed them all at a profit, right? CP was one of the debit spreads you will no longer see in the account. This one was perfectly executed. We got them all the way down here and have been closing progressively in these areas. Very easy swing trade from a very beautiful area of support down there. That was number one. Another one that I've been maintaining for about 3-4 weeks at this point was Qualys. We opened Qualys at the lower end of support down here. We were waiting for the pop back above the higher end of this range of resistance. We got it last Friday and I closed this one. Very decent profits, guys, about 30% profit on that call debit spread. So I'm out of that one too. Even though it hasn't rallied a tremendous amount from the bottom, we don't need it to. We only need it to rally into the previous area of resistance, and our target was hit, so we exit the trade. The other trade that you probably saw that I was in was the Airbnb call debit spreads. I was calling them out for a long time on the channel publicly, built a position, and then we sold it exactly where we wanted to into the 130 resistance. Happy about that one, guys. That was over a 50% gain on that play. So for all of you that followed me, congratulations. Another one that we absolutely smashed was John Deere. John Deere built the call debit spread all the way back here, guys, in early July, and we held it for so long, but we had these for December expiry. We waited, and finally the thesis played out. They finally got their rally. Happy to say we closed them last week in the low $400 range. That too, guys, was a 35% gain. I know it took a significant amount of time to make, but the play was solid, the entry level was solid, and we took profits exactly where we wanted to at the top end of the resistance range. So that was another play, and another good play too, guys, that I had some call debit spreads on. This one was available publicly on the channel as well. This was UPS. I've been talking about it for a long time, building a position in the lower area, looking for a swing back up into the mid 130s and right 132 about the midway, and then 135 136 for the higher end of that trade. So happy to say that we closed all of the UPS positions in the last few days of trading. Pretty much, we closed one last Wednesday when they broke 130, higher end of this range right here. And then the last one we closed on the Friday session all the way here in the mid 133s. Very happy with the way that trade played out as well. So most of all the debit spreads that I've shown on the channel, guys, they have all made us money. I had some on Visa, I had some on Google, right? Haven't really lost any money in the past 2-3 months, showing you guys the call debit spread strategy. Very easy strategy to run, provided you run it in the way that I do, right? In a more conservative manner, 3 months of time and targeting roughly $2 in debit for roughly a $5 width of a spread. So that means you're slightly out of the money, but still that is pretty much the sweet spot that I've always found running debit spreads over years and years and years at that point, right? So that's pretty much everything for the debit spreads that no longer figure here in the portfolio. Last week, you may have missed some trades that I did in terms of some swing trades, possibly, right? So one of the trades that you may not see in this position right here, let me just pull it up in our Discord, right? So we had a few plays moving into last week. The one that I'm most happy about was the snipe that I got after on the AutoZone earnings, right? So let me just go into them real quick. Let me see, where was it? Can I find it? Sorry, I'm just kind of talking to kind of fill the gap right here. I'll find it eventually. There's just a lot of trades, right? So let's move back here. Oh no, sorry, it's in the other channel. This one is supposed to be a medium-term trade, but it was an actual short-term trade. That one I can show you in the portfolio right here, but I'd rather show you the exact call. There was the UPS trade that we closed as well. Here was the AutoZone trade. So the AutoZone trade, we bought it after earnings. Technical analysis was given in the chat live, and then we closed it at $3,100. So very easy, $150 on one single share, guys. 5% in 1 day of trading. It was a beautiful technical setup. So that was one that I took last week that you will not see here. Everything else from last week, either it was some short put plays. There was a few short put plays. Let me just show them right here rather than showing the transaction history. I'll show you in the Discord so that way you guys are knowing what you're getting, right? We had a square wheel trade right here, the 64s, right, for September 27th. Those ended the week completely worthless last week, so very, very happy with that trade. We also took a very fast trade on Visa as well. Let me just show you guys. So Visa, when they had their day where they went down 4% last week, let me just show you. Can I find it? Can I find it real quick? Hello, Visa? Oh, here we go. So Visa was opened 9/24, so September 24th, 272.50 strike. We got them for $2.23 right there. So this move on Visa was a very, very easy trade in my humble opinion. It was this huge day of red that followed up right here, right? Big day of red. We pretty much got it midway through the day at about 274. And I was fairly confident in Visa's capacity to kind of recover this move because I did not believe in the Department of Justice lawsuit surrounding their debit card monopoly, right? So we were just looking for a little bit of mean reversion, and eventually we did get it on the Friday session. We were able to close this at the high of Friday. We closed this one for some very juicy profits, guys. We got 223 in credit, and just 2 short days later, we were able to close this, or actually 3 short days later, we were actually able to close this one. You can see the closing trade right here. It was pretty much closed on the, where is it? Visa. 98 cents, right? So captured over 50%, 56% profit in roughly 3 days of trading. Exactly what we're looking for here in terms of the metrics. Those are just a few of the wheel trades that I took last week, right? In terms of the ones that I have for this week, Amazon. I wrote these today, guys. Amazon 180s for the session. I was saying it, I believe, last Friday as well. If Amazon were to pull back, I'd be interested in playing the 180s. The 180s got open up today. I took them. We got about 80 cents minus commission, looking very, very decent. Not quite 0.5%, but I'm willing to sacrifice a little bit of premium just because of the quality of Amazon stock. But as a whole, it's still a 30% annualized trade, guys. If you want to do the annualized math, just divide 0.8 divided by your strike price right here. How many days in a year? 365. How many days to expiry till Friday? 4 days, Tuesday, Wednesday, Thursday, Friday, divide by 4. Here's your annualized ROI. That's 41% annualized. So it's worth it for us to take that trade. Moving on further, a lot of the other positions I've conserved. Alimentation, we still have those shares right there, looking to write some covered calls. CL, Colgate, call debit spread. I'm pretty sure I showed you guys this one. That one is still active, the 105, 110s for January. Very more longer duration swing trade right there. Still have the Disneys. These are a longer term play. The Google bull call debit spreads are doing good. We covered up the Leap as well. So we have the 135 leap call for September 19th of next year, but just in the event the QQQs have a little bit of a pullback from now through November because of earnings season, possibly some recessionary data, right? I'm looking to cover this one up. So what I did is I wrote the 165s. Last Friday, they were at the money. So we covered them up at the money, got about $621 in credit, which basically guarantees that we're out of this stock at 171. 171 is literally the resistance area on Google that I was pointing out on the chart, right? 171, this whole area right there. So we're locking in some gains. That's all this is. And if the stock ever drops, well, we can pocket a lot of this premium, but I'm not looking to sacrifice the 40% gains that I have on the leap so far, just looking to lock in those profits. Still have the Intuit trade, still have the Intel leap call options. Those are not going to change. The Micron asymmetric leap calls as well. We have those too. We also opened last week a Netflix bull call debit spread for Netflix continuation to the upside. December's 730 versus 735s. We opened 4 of those for about $2.18 each. They're roughly break even, slightly green right now. We also have some wheeled trades as well. New, we have the October 4th 13.5 puts, 3 contracts for 13 cents. I like new in that area. I actually brought it up yesterday as part of the top 5 options play video. 13.5 down to about 12.50. This is the area that I want to be accumulating new. So that's just a trade in favor of that. The NVO bull call debit spreads, admittedly, these are not doing too well. This is one trade that has not worked out for us so far. One of the rare current losses on call debit spreads. Well, I mean, a lot of the other positions were losing. It's just that they weren't down pretty much this much, right? So this one, we do still have a lot of time on it. I'm willing to give it a little bit more of a chance, but so far, not the best trade, guys. This is pretty much one of the only losers of call debit spreads that I've had in the most recent 2-3 months of showing these types of trades on the channel. So we'll continue to manage this and monitor this position actively. I still like NVO. They've been kind of bogged down by some negative news headlines in the past few weeks, to say the least, but their supply chain is doing excellent. The demand for their products is doing excellent as well. I think it's just a matter of time before they really start reverting and start coming out of these slight oversold conditions that they're in right now, right? Daily approaching oversold conditions. So we're going to give them a little bit more time on that NVO trade, to say the least. Oxy, I still have my Oxys, haven't touched those positions. SoFi, 10 contracts. I'm pretty sure I showed you guys this trade as well. $7.5 puts, 7 cents, about 1%. These expire on Friday. If we get a sign, perfect. I love SoFi, 7.5 to about $7. Love that trade right there. We have the Square call options as well. Not too sure if I showed you guys this trade. This is a Square leap option for January of 2026. I was telling you guys how much I love Square in these lower levels of accumulation. Love, love, love this company. The share price is extremely, extremely cheap. Look at the PEG ratio for a burgeoning, growing tech company, guys. Beautiful support location. So I threw some out of the money leap calls at it. We'll see how those go. We have the SQQQs. This is just a hedge trade, and all the TLT trades as well. This is just hedging in the event the market gets more recessionary headlines and things like that. The economy slows down, unemployment rate goes up. This is just hedging the rest of the long positions in the portfolio, right? We also have another wheel trade down here, TSM. October 4th, the 170s, that's my semiconductor exposure for the week. We're slightly down on those. I would not mind picking up any shares of TSM at 170 though. Love the company and I do like that level. And the last one that I may or may not have shown you guys, I don't quite remember from the last portfolio update, but this is the Waste Management 210 versus 220 bull call debit spreads for January of 2025. So a couple months of time on those, looking for some expansion for Waste Management. Beautiful range of accumulation, just looking for it to kind of pop up into the 215, 220 level. That's pretty much the entire portfolio recap. Spend a little bit more time on it just because I hadn't done it in a while, guys. So hopefully you appreciate that. As I said, I'll continue to kind of, just trim down the portfolio as we rotate in and out of these positions right here. At any given time, I'll probably run no more than maybe 3, 4, 5 different call option positions, right? Whether call option, call debit spreads, or call options with 3-4 months worth of time. So I'll stick it with about 3 to 5 directional plays at any given time. We're always going to have some leaps, right? Because we don't have to monitor them too much. and about 3 to 5 wheel trades as well. So this is probably going to be, arguably, this is probably going to be the markup of the portfolio moving forward, right? It appears as though there's a lot of positions, but a lot of them are the same position, right? There's two lines for Intuit, there's 2 lines for Micron, there's 2 lines for Google, there's 2 lines for Disney. You know what I mean? There's like 3 lines for OXY, there's like 5 lines for TLT, right? But it's all the same trade at the end of the day. So at most, probably going to be running 8 to 10 different positions at a given time to make it more manageable, not only for me, but also for you guys watching who want to learn a lot more, right? So hopefully you guys enjoyed today's video. If you did, consider dropping a like, would really appreciate it for the growth of the channel. Also consider subscribing to the channel if you're new, would love to have you back. We do these videos every Monday to Friday after the close. And lastly, if you have any questions, as per usual, guys, always feel free to leave me a comment down below. Anything you want, stock analysis, technical analysis, second opinion on an options trade, macroeconomic discussion, anything you want, leave it down below. And in the event you're interested, guys, in joining our Discord to get access to not only the Monday through Friday private morning live streams where I trade with you live and answer all of your questions, but if you're interested in getting all of my trades in real time, as a matter of fact, we've had some very, very good performance over the last a month and a half that the Discord's been active, right? This is all the trade recaps. As you can see, pretty much all of them are wins, right? We had a tiny loss on a wheel trade on AMD here, 25 bucks. One tiny loss on an Amazon directional bet for some weekly call options. Don't do those that often. The rest of the weeks were very good. All of these assigned positions, except for Ally, were wins as well. So those were good. Another week, right? 2 weeks ago, all wins right there. Last week, pretty much all wins except for a Tesla, small hedge trade on Tesla that we closed at a loss, but that was just a hedge to the downside in the event the market rolled over. And last week as well, right? This is the Ally trade that I was talking about earlier. Closed it out for a loss, but other than that, pretty much win. So if you guys are interested, guys, the link is down below in the description. So hopefully to possibly see you in there in the near term future. That's pretty much everything I had for you guys today. So take care, peace, and I'll see you tomorrow.